Morning, welcome to IG's early morning call. It's Friday, 8th of September. Let's take a look at the headlines as you await the start of what now looks like to be a slightly stronger start to the European markets. In the last half hour, we've seen some positive activity, but broadly speaking, it's a week when we'll be following what's happening on the currency markets with the dollar on track, another week of gains. It's the longest run of gains that we've seen now in more than a year in terms of weekly gains. Yuan is at a 10-month low. We've been tracking the yen this week against that stronger US dollar, and a number of currencies continue to suffer at the hands of that strength. In amongst other headlines on this Friday morning, we are watching what's happening with the strikes in Australia with Chevron around the LNG talks. There's a lot of talks with unions. They've ended without a deal. Strikes have officially begun in today's session. And as much as we're watching what's happening with other markets around the world, it's about soft commodities, and you're wondering why there's food inflation. Part of this is brought about by elements that go into normal foodstuffs, including sugar and cocoa. Here in the London markets, yesterday we saw a 46-year high for cocoa, and in New York, sugar has hit a 12-year high, and we continue to monitor upward pressure on a number of foodstuffs as a result, partially by what's happening with the weather, but also because of what's going on in amongst some of the other areas of the world and food production, with concerns about what's going on with supplies. Let's take a look, first of all, now at what's happening with the volatility markets. We are down today, indicating to me that we are seeing a slightly stronger start at the moment here in the London markets, at least as we see a reaction to the small turnaround that we're getting on the London session. And across Europe so far today, this drop that we've seen here pulls us away from that 16,149, 76.4% retracement that we've been looking at, which had been support, is now resistance. So we're now on the way down again after a week of strong gains on the volatility markets. Let's take a look at what's happening on the European equity markets broadly, because as I said, we've now got a gain on the markets. You can see these are 30-minute candles here in London, where we've seen since 6 o'clock this morning, we've seen a rise on the session. This vertical dotted line is the line at which we closed out the session in the cash markets last night. And you can see going into the closing bell on Wall Street, we really hadn't moved very much. And then all of a sudden overnight, there came this big candle on the way down. We've seen some poor numbers coming through in the Asia Pacific markets today, Japanese growth in amongst them. And we've seen a little bit of a regrouping before a long position is now gaining money. It's not a big move up. It is only a matter of small points. But nonetheless, we do have a rise on the markets there at the moment. Show you what's happening on the daily candle, just to remind ourselves as to how we are developing in these markets at the moment, with a rise at 74.55, second day in a row of gains for the London FTSE 100. Let's look at what's happening on the rest of the European markets with the German DAX. Same sort of price action now, with a little bit of a rise, moving away from this line of support at 15,689, which you've been monitoring. Yesterday, we were talking about the early morning call with the expected open, a negative open on the German markets. That's exactly what we got. And then came the race back to profitability on the markets in yesterday's session. And again, you can see today we are on the way up. So it's a very different story today that we saw in yesterday's session, despite the fact that yesterday ended with gains. And you can see we were talking yesterday about this 200-day moving average being broken yesterday. And it looked like, for me, this time yesterday, we were going to get a market that closed below that. But in fact, that didn't happen. And we continue to see support at the 71.91 level, currently trading at 72.19, French CAC 40 in amongst the gains as well, as we see the start expected to open with a rise at the top of the hour. Let's take a look at what's been happening overnight in the Asia-Pacific markets, where there has been a broad sweep of declines. There's been a massive storm today in the Hong Kong markets, and Hong Kong has been closed for much of the day. S&P ASX 200, Nikkei, all on the way down on the session in today's trading day. Let's take a look at what's been happening in Hong Kong on the 24-hour markets. Just want to show you this loss that we saw, what was in the 24-hour market yesterday, and then came the close. You can see this candle today is barely moved on from that close. Shares in some Apple suppliers falling overnight after reports that China's widened curbs on use of iPhones by state employees. And this is a news headline we were talking about breaking this time yesterday. So it's made itself felt in some of the markets out in the Asia-Pacific region. This remains a Reuters report, but nonetheless, certain market commentators suggesting that it does have credibility and that Apple is trying to close down a lot of the global, what it perceives as misinformation amongst its own people within China, and trying to make sure that China continues to regulate itself via state activities. And state has started to insist that people hand in their iPhones if they have anything to do with the Chinese state. Private people are still able to hold and use iPhones, but for state and agency use, they are now banned at work. I want to quickly update you as well on what's happening with other markets around the region. I was talking about this loss in Australia. These are 30-minute candles. Overnight, we've seen this move that we've got on the strike action around LNG, which I'll cover in some more detail. But today you can see this market is holding out at the 76.4% retracement at 71.45. Any continuation of this slide, of course, will take us then down to a total retracement of 7,083. But broadly speaking, it's a day when we see this market, another negative market swing, as we saw closing down 0.25% on the trading day today, adding to what was already a poor week overall, not just for Australia, but many of the Asia-Pacific markets, and adding to the losses that we've seen recently. Let's take a look at what's happening on Wall Street. As of the close last night, we did see gains for growth stocks, but it was those older economy stocks that saw some declines. And you can see there the Dow Industrials was, sorry, the other way around, my apologies, S&P 500 and NASDAQ down. Growth stocks on the way down, my apologies, old economy stocks on the way up. And this Dow chart we've been following this week continues to use this line of rising support as the point at which to put your stop loss. Now, we were talking about this yesterday. If you had your stop loss down at where we were talking about, below the 34,000, what was that, 34,500 level, depending on precisely where you had it, you might have been stopped out. But nonetheless, the market is now rising again, moving up away from that line of rising support. I was talking yesterday as well about what's happening with momentum in the charts. And momentum seemed yesterday to be draining out. That is now beginning to flatline a bit more. It's difficult to know where these markets are going. Don't forget the Federal Reserve comes through with an interest rate decision on the 20th of the month, which could well give us direction going into the back end of this year. Little move on from the close yesterday on the NASDAQ on the 24-hour markets. Stay on the charts. Just wanted to update you as well on what's been happening in the background for the US dollar, because it has been another really big week, longest winning streak since 2014 in terms of weekly moves. And you can see that I drew this ellipse on here, just showing you the crossover of the MACD line below the signal line, which at the point was suggesting was going to give us some more impetus on the downside. In fact, that didn't come to pass. And I talk about putting a stop inside tightly in on a move when you're a day trader. This would easily have stopped you out, so you would have lost money, but not much. And then has come this rally since then. It has been a really strong week. And we've got a number of factors conspiring. Yields rising in the US, expectations that the Fed possibly may be still yet to raise interest rates again at its September 20th meeting. But in addition to that, if you look at some other areas of the market, you can see that there's a lot of reason to pull money out of other areas. This is the yuan. This is the dollar rising against that weaker Chinese currency. More evidence this week for the Chinese economy. Disappointing services PMI. Exports dwindling for a fifth straight month. This USD CNH has now broken from the recent highs of or very close to the mid highs of recent August. It's broken the mid highs of August, but in fact has now gone to levels you can see here, almost, or in fact now since the 1st of November 2022. So we're now at the high point for the year, the dollar against that weaker Chinese currency. In amongst some of the other news out in the Asia Pacific region today, I was talking about what's happening in Japan. Quick update on what's been going on there in terms of growth numbers out of the Japanese economy. This was a final revision to the second quarter numbers. Japan's economy growing by 1.2% quarter on quarter, below estimates of 1.3%. Annualized growth reaching 4.8%, down from a preliminary estimate of 6% growth, and below market forecast for 5.5% expansion. This is for the second quarter, not for the fourth quarter on those GDP numbers in Japan. The main factor behind the downgrade was a 1% drop in capital expenditure compared with the preliminary flat reading. And if we look at what's been happening on the dollar-yen chart, now this is another area of interest in the markets recently, with this move up for the dollar against that weaker Japanese yen. In the last couple of days, we've seen a pullback in the markets for the dollar against that yen, but in fact remaining the case that we've got a very strong dollar against that weaker Japanese currency, and in the last couple of days taking us back to levels they're not seen since the 7th of November 2022. Canada today at 1:30 p.m. Just to continue with this idea of economic data to watch out for today. We've got the unemployment rate out at 1:30 UK time. The rate is expected to rise to 5.6% in the month of August. That will be up 1/10 of 1 percentage point. The average hourly earnings up 5% year on year. Just want to show you what's going on with the dollar against the Canadian. Again, much of this is as a result of the strength of the US dollar, but there is a reason to sell down the Canadian dollar on its recent performance. And we've seen it in the last couple of days peak above this line of resistance at 136.97, which was the high that we saw back on the 28th of April intraday. And we closed past there, taking us then to levels not seen since the 28th of March. So this trend also in place. Like any trend trading, if you hold a position and you are moving with the money, continue to bring a stop loss in underneath you and continue to book in the profits. In terms of expectations of economic data out today in the US, wholesale inventories are forecast at 1:30 p.m. today to fall by 1/10 of 1% in July compared to June. So that's another number to watch out for. Before we leave the currency markets, just wanted to complete the circle and talk about what's been happening with sterling. And this is the chart here for sterling against the US dollar, against that stronger dollar. But there was a reason to sell sterling this week. Remember, if you go back to the midweek statement from the Bank of England Governor Andrew Bailey, who was talking about the expectation the Bank of England is there or almost there in terms of rate rises. He didn't really clarify anything, but the market did sell down on his comments on expectations that the Bank of England is possibly closer than might otherwise be the case to the top of interest rate rising cycles. Now, there have been a lot of speculation that because inflation is holding up, the Bank of England might still yet be aggressive. I think the bank's very conscious and has a political reason to try and make sure that there is no recession, and they want to try and avoid that if they possibly can. The bank might just lean towards the dovish this time around at its next meeting in a week or two's time. We'll have to see what develops there. But Andrew Bailey did confess that there might be a chance that the Bank of England might have to raise interest rates at its next meeting. But it is nonetheless very close to the top of the interest rate rising cycle. Where it goes from there remains to be seen, because I think that inflation is likely to continue to remain very sticky because of the high oil price. And one of the reasons why we got high oil is because we got a restriction in fossil fuels coming through into the markets. Insofar as oil is concerned, we had that decision this week from Russia and Saudi Arabia to confirm that they want to continue the cuts. And then we got the LNG side of things in Australia, where we've been hearing today that strikes have now been confirmed after talks have finished. There was no deal in those strikes, potentially disrupting LNG output from facilities. Now, these facilities in Australia account for something like around about 5% of global supply. So they are bound to have some sort of an effect. Now, I don't have a gas price for you to reflect all this, but what I can show you here is the all-session stock of Chevron, which has been rising recently, although yesterday it's a small drop on from what had been a very strong week so far. This is an all-session stock. It will open at 9 o'clock this morning, and there will be a reaction to this news that unions have said that a 2-week total strike could follow if an ongoing dispute over wages and conditions remained unresolved. The latest we're getting in terms of headlines is that those talks have concluded and there has been no announcement of any resolution. Australia is the world's biggest LNG exporter, and the ongoing dispute over wages and conditions at Chevron's Gorgon and Whetstone operations have been stoking volatility in gas prices. But we're watching what's happening as well with the Chevron price as at the open today at 9 o'clock this morning. All sessions on the IG platform. Now, talking about oil, let's just quickly return to some of the news that we've seen out this week. Remember, the American Petroleum Institute had a big draw on oil, far bigger than expected for a second week in a row. And the EIA numbers out yesterday confirming this absolutely. Crude oil stocks falling by 6.3 million barrels last week, according to the EIA, after 10 million plus drop in the previous week. Gasoline stocks also down. Distillate inventories showing a small rise. But broadly, we're seeing a mopping up of some of this extra oil in the market. And this can be demonstrated, I think, in part by what's been happening with some of these oil markets recently. Although yesterday we did see a little bit of a drop, which might be seen as contrary to the news that we saw yesterday. Basically, they're remaining near 10-month highs. Supply concerns recently pushing prices up. Tonight, the Baker Hughes rig count since the start of the year, the number of operational rigs have been almost constant decline. Last Friday, the total rig count fell by 1. Taking the total rig count down to 631. The number of active oil rigs remaining at 512. Just want to return to one other area of the market. Spot gold. It's worth looking at if for no other reason other than the fact it's following the 200-day moving average. Today, you can see here that second day in a row of gains, bouncing off that red line, which is the 200-day simple moving average, something that some traders continue to monitor. We've seen other areas of the precious metals market. Palladium is something that has been looked at recently, and you can get this by dialing in the spot palladium market into the IG platform, which will give you details of palladium, which I now don't seem able to bring up. But palladium has managed to see some moves recently. I'm not going to bring in that chart. That's just something I can't dial in at the moment. For some reason, it's not available on my platform. Palladium is in the news amongst other things that are happening on the precious metals markets. One of the areas of the market that remains of a big concern is inflation, and food inflation particularly has been one of the things that people have been looking at. And we've seen extra evidence recently to suggest that part of this is because of some of the elements added to foodstuffs that are distributed and sold around the world. Now, we've seen some gains for two areas of the market, both sugar and also cocoa. I want to show you cocoa first of all. This is a London cocoa market, which is at a 46-year high. Now, you can't go back that far on this chart, but you can see this rapid rise that we've seen in the price of cocoa. As an additive, prices have been rising. Causes of this are almost entirely natural. It is all about the fact that crops have been suffering because of weather, disrupted weather around the world. And it's not just cocoa. There are a number of cocoa markets around the world. I want to show that London one, but it's also sugar as well. Now, this does go back some considerable time. You can see, in fact, this chart on the IG platform, New York sugar number 11, goes all the way back to the early 1980s. And you can see this rise that we got here on the right-hand side takes us back to these levels. The highs occurred back in February 2011. So here we are now at levels that we've not seen since October 2011. So we're looking at 12-year highs for the price of New York sugar. And we saw this market close out yesterday's trade. You can see above this prior line of resistance we've been looking at there, which is the intraday high. In fact, we have been higher than this intraday back on Tuesday, the 5th of September this week. But nonetheless, this is a closing high that we've not seen in 12 years, the price of New York sugar. One of the reasons why we continue to see food inflation around the world for foodstuffs that are sold in their end form, which includes many additives like sugar. That's it. We're back at 10:30 with Charting the Markets. Do watch out for Chevron at 9 o'clock this morning when trade gets underway on the IG platform.